Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We're going to be looking at the most active stocks in Yahoo Finance this week. Actually, this specifically today, but before we do, I want to remind you, if you're not aware, you lived under a rock, you weren't paying attention. Today was Liberation Day 2.0, maybe 3.0. I've honestly forgotten how many Liberation Days we've had, but as you can tell, everything was red today. So the first thing we're going to look at, I actually want to look at NVIDIA. The reason why is because NVIDIA has been a bellwether stock. NVIDIA has been one of those stocks that has essentially been leading the market ever since this rally has begun after the first Liberation Day in March. You can see when looking at either the line graph or just the actual chart itself that NVIDIA has essentially been on a tear for the past 6 months. When we're looking at this line chart here, this will be helpful for the rest of the charts. Whenever you see red underneath the line, that means it's in a bearish sentiment. Whenever you see it in green, that means it's bullish sentiment. The top of the range here, the red is the sell top. That's where you should sell, or at least where I do. And then the green is where the buy bottom. So I call that out because we'll be looking at these pretty quickly as we look at a bunch of different charts here. And if you're interested in looking at this, you can always go to traderangeauthentication.web app. You can go ahead and sign up for free. All you need to do is log in with your Google account, and then you'll get access and be able to look up 30 different tickers every single day. Now, when we're looking at NVIDIA, what I'm noticing, the most important part to me, aside from the price, is the way that the volatility is moving. So right here, I have a custom volatility calculation that I built. Essentially, what I'm looking for is not just the volatility itself, but I'm looking for the correlation to the volatility as well. So right now, the correlation is actually very, very high in terms of where it is relative to the volatility. So if you're thinking about that, what I can do then is I can start to build what is called a future price path. If the volatility is falling and the correlation is falling, that means that the price is most likely going to rise. If you have correlation is high and the volatility is breaking out, you'd assume that the price would also be breaking out as well. Now, when we're looking at NVIDIA here on this actual table of price, this will be helpful as we look at other stocks. The thing that I'd like to see is that, yes, we were down 2.33% today in NVIDIA, but we're back in the middle of the trading range. The most important part to me, too, is that we maintained it being bullish. We see here just above the $170 trade level. We see that we've got a higher low in the bottom of the range. We do not have a higher high at the moment, but we just came down just ever so slightly. And we are still positive on the 5-day, 15-day, 1 month, 3 month, 6 month, and 1 year rolling return. That is very, very positive for what I see inside of NVIDIA. So let's go ahead and take a look at some other stocks we've got in here. So we'll look at Amazon next. Amazon, very interesting. It was down 8.2% today. Let's go ahead and look and see what we have for Amazon. Interesting, it was down 8.2% today because Amazon obviously just had earnings. Obviously, when it comes to tariffs, especially when it comes to imports on a lot of countries, like we're talking about India, we're talking about China, the ones that are going to get the largest amount of like tariff imports to the United States, Amazon is going to be very, very exposed because a large part of their business is going to be based on selling cheap things from China to Americans in America. So if we're looking here at the overall range, if we go ahead and look at the 6 month chart here, we can see that the range for Amazon has been very, very tight. When you start to see a really tight range like that, generally that means that there's very low volatility. When you get a move either higher or lower, what will usually happen is you'll get an expansion, very similar to how you see that it was kind of all bunched up here in the middle of April. We see we got a pop down, and then the top of the range went up, the bottom of the range came down. That's what we're essentially seeing here. When we're looking at the candlesticks, it is very, very clear that we did bottom here. It looks like on the 21st of April. We have been riding essentially slightly higher ever since. The green line at the top means it's been bullish the entire time. The red line at the bottom means it's been bearish. This is very helpful if you're going to go ahead and look at any stocks that you're interested in here on the Trade Range app. So if we're looking at the volatility, again, as I would have mentioned, we are seeing that the volatility is essentially muted, right? We were looking at around like a 13 or 14 in my custom volatility there. Right now, it looks like we're around a 10, and we've really been essentially floating around like a 9 or a 10 for a little over a month and a half now since we are in August. The one thing that's unfortunate, I will say, is that I do see this correlation got very, very positive, and I can see that the volatility is falling. That is not good to see. So when we look at the Amazon table, what we can see is just looking from left to right here, we're looking at the price. The close has a very blue background with black lettering. That means it's 2 standard deviations below its mean. The thing that is concerning here is that we did see back-to-back 2 days of red lettering with a white background on the volume. That means it's 3 standard deviations about outside of its own range over the past 20 days. We did maintain the bullishness, but we are now well below, very much well below the trade level. And you can see that we see the bottom of the range is really starting to break its way down. We still have a higher high, but I would suspect that's only because we saw the volatility today. If we're looking at the future price path, I'm not sure if we're going to get a price to fall or if we're going to continue to see it being priced to rise. We'll have to look and check on that in the middle of next week. But if I'm going to say that there's anything very negative here, it's that we're negative on the 1 month, the 5-day, the 15-day, and the 1 month here on Amazon. We've also gone negative and have maintained being negative on the rolling 6 month return, which is a very bad indication for forward future returns if you look at any of the actual data on that. So Amazon is, out of all of the things that are in the Mag 7 right now, probably the least interesting to me in terms of where they are. I'm actually Meta is not on the list of things that were the most active for today, but because I just brought up the Mag 7, I just want to quickly take a look. So if we go ahead and just give this a second, as it's going to go ahead and pull the data, do all the calculations, and then return the volume, the volatility, all the data and everything that we need here, we can see that Meta, well, Meta obviously yesterday had a very good day because they had a very powerful earnings move. You can see they've been bullish, and if we go the 9 months, Meta's been bullish ever since the very beginning of May. It looks like on the 2nd of May is when they got their first bullish signal after having a lot of bearishness in the middle of March and April. We can see the top of the range is starting to break out. We can see that the price has been continuing to steadily go higher and higher. The one thing that's very interesting is that we did see a complete collapse in the volatility here in Meta over the previous like month and a half, essentially since summer has started in June and July. We saw the complete collapse. Now, for me, the way that I look at volatility, especially this calculation, I look at volatility as when it's falling, that is when you're actually getting the revealing of the trend. So for me, as we're starting to see it falling and it maintain its bullish posture and continue to break out, and then really leading into earnings to confirm, that is a very bullish signal to me. I know that today was an ugly day in the markets, but I do think that Meta still has an opportunity to be a fantastic stock for something that I will continue to be buying on dips. Now, if we go ahead and look at the table here, again, going from left to right, we're going to be looking at it from the close to the volume to the sentiment. What I like to see is that we've come back down. We're not necessarily in the middle of the range, and that's because if we look the day before earnings, Meta was one standard deviation below its mean. Then it was three standard deviations above its mean because of that price earnings gap, which I know a lot of traders call in terms of when you have a big earnings move, you get a gap, things bust out higher. I mean, if you think about it, Meta's worth, I don't even know how many trillions of dollars, but they're up 11.25% just yesterday. That is a remarkable move inside of Meta. But we are back down to 750. But if you think about it, from the perspective, we are still positive on the 5 day, the 15 day, the 1 month, the 3 month, the 6 month, and the 1 year. Now, what's also very nice is that we did see today, even though we got down 3.3% or 3.03%, previous days, nobody was really selling who was buying in recently. We did maintain the bullishness, and we are just, well, we're still very much above the trade level, but the trade level is continuing to move higher. Meta continues to show that it's probably the strongest in the pack at the moment. And if we look, the other stock that had a very good earnings was going to be Microsoft. This is one of those Mag 7 as well. Microsoft continues to be an outperformer as they are now the infrastructure of AI. They're definitely downstream of what NVIDIA is doing. They're downstream of what OpenAI is doing, and they're continuing to monetize their AI inside of their actual markets, which is exactly what a company is supposed to be doing. Not all these things are just stocks. Some of these things are actually just businesses. And we're looking at Microsoft. They show us very similarly kind of what Amazon was doing, a very tight range, but it's continuing to break out higher and higher. We look at it from the chart and the candlesticks, you can see we had very low volatility. And for many people, it's important to know when you get low volatility like this, many people were not around the markets in 2013. We had incredibly low volatility. We ended up being up 30% for the year. When you get these really small compressed candles, that is a very good sign, especially when volatility is like just gliding down. Just like I mentioned before, when volatility is falling and it is gliding, that is when the trend is going to reveal itself. So when you see what we've had here inside of Microsoft for the past, it looks like 5 months or so now, we are looking at something that is incredibly bullish, incredibly strong, and has a very good amount of volume, which is going to continue day in and day out. Now we're looking at the overall trade range or the table here. We can see that we are back. We're two standard deviations above its mean here at 524.11. We do see that, yes, we were down today, but we had 28 million shares traded, very much lower than the 51 million shares traded the previous day, and not necessarily something to write home about, but it is a little bit more than the 1 day where we had 25 million shares traded on the 30th of July, the day before the earnings. We are still bullish. We still see it above the trade level. We see that we're still getting higher highs in the range. We see that we've got volatility, but it is starting to fall. The future price path continues to be rising. When we look, yes, we were negative on the 1 day, but the entire market was down today. But we're positive on the 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year. There are some really good things to be taken out of what has been going on here in Microsoft. Now, if we go back to look at what have been the most active stocks, I'm not even going to cover Lucid. As much as I love Lucid, I have covered it in so many other videos, and this thing continues to not go anywhere. I have said multiple times, if this thing doesn't break three, you're just trading in an absolute range. Actually, I'm just going to look at it for you because I think that Lucid, while I don't find it to be an incredibly useful stock to be paying attention to unless you're a range trader and you're selling at the top and you're buying at the bottom, I find that this is essentially going to be one of those ones that is going to eat up traders over the course of the entire year, maybe even longer. Because when you think about it, where have you gone? Like if I just get past all the data and I look at your 1 year, you're still down 25.9%. You're still down nearly 15% over 6 months. This is, while Lucid is fun and gets a ton of volume, it is not something I'd be paying attention to. That's just my 2 cents. If you have a different opinion, please put a comment below. And if not, you can always go ahead and check it out on this little app here. Go ahead and trade rangerauthentication.web app. You can go ahead and log in. Again, all you need is a Google. You need a Gmail. You'll log in. You can access it for free. You get 30 different individual things that you can look at. There are premium features that you want to have access to, but if you want to look at individual stocks, you want to get an idea of how I'm looking at things from a volatility perspective, a volume perspective, and a price perspective, feel free, come on in. The water's great. So we're looking at VALE. This is an interesting one because this is, I believe, related to like mining. This one is interesting because again, this looks a lot like Lucid. Where has this thing gone? Like if we really look at this over the past 5 years, it's essentially down. Over the 1 year, it's essentially at the same price. 1 year ago is at $10, right? 1 year ago is at $10. Today it's at what, 971. I mean, I'm not saying that this isn't a great chart. I'm just saying, well, it's not a great chart. Actually, it's a hideous chart. This is a terrible thing to be trading. At least from my opinion, because I'm more of a long-term swing trader. But when we're looking at this, you can see that we've got volatility that's falling, which is great because it's starting to expose the trend. It is bullish, as we can see. If we go ahead and look at what the table's been showing us, this thing, ugh, yuck. I'll tell you why I don't like this. Okay, so first off, we see 91 million shares traded, and you were up not even 2%. Okay, and that was a huge amount of, that was like a huge day. Secondly, we know that if we look at the 5 day, 15 day, 1 month, and 1 year, we're still negative. That is disgusting. That is a waste of time. The last thing is we are below the trade level. Yes, we're bullish. Yes, we're starting to see the range kind of make its way. But if that thing doesn't break over 11, 12, 13, I just don't foresee that we're going to get anything that's going to be really positive inside of Valet. Let's go ahead and see what else we have. What I'm going to do is I'm just going to very quickly look at what's at like the top of its 52-week ranges, because those are the ones that I'm going to be looking for. I personally be looking for what's closer to the top of its 52-week range because those are much more interesting to me. We'll go ahead and take a look at Tesla because Tesla's a great reminder that just because you have a charismatic CEO, just because you have fantastic products, and just because you have a lot of market cap, does not mean that the stock has to go anywhere. Now, if you've been trading this thing through options, there is an incredible amount of gamma, Vanna, charm, all these different things. I don't know what they mean. I don't really care. I only pay attention to price. But when I'm looking at what I'm seeing in Tesla, again, this is very similar to what we saw in Valet, very similar to what we looked at in one of the other stocks. It just hasn't gone anywhere. This thing is really not showing us anything positive. I mean, we were bearish here in January, February, and March. We became bullish in April, May, June, and we're still positive here in July. But if we really look at the actual price action, other than just the sentiment, the thing is starting to essentially roll over. The volatility is essentially being squeezed out of this thing. Tesla usually has a volatility, it looks like up here around like the 30s. Right now, we're in the like low single digits. And when we look at the actual data table here, again, we are 2 standard deviations below its mean. We are bullish, yes. We are below our trade level. Okay, so if we're going to just start marking the things that are actually bad, we're below our trade level. That's bad. Okay, we see we've got 2 price to falls in a row. That's bad. We're negative on a 1 day, 5 day, 15 day, 1 month, and 6 month. That's bad. Like there is so much negative data when I start to look at how Tesla's actually operating. Not necessarily the actual company itself. I'm talking about just the stock. The company may be doing fantastic. They may be seeing internal like metrics are crushing it. Their operating margin, their free cash flow, their opportunity for their markets, and maybe got new products. I'm not sure. When I look at the stock, the way that it's actually performing right now, this is dog shit. This is nothing that I'd want to be trading. It's just not one of those things that I would necessarily waste my time or spend my time reviewing. Because when you think about it, you could be spending so much more time in so many other stocks. Like the reality is that if you don't know what to do, or if for me, I'll tell you what I'm going to do for myself. If I find that I'm in a stock that is not performing very, very well, I'm just going to buy the Qs. The reason why, and before I even look at Apple, the reason why I say that I'm just going to buy the Qs is because the Qs are on an absolutely generational run right now. I can just buy call options at the Qs pretty much at the money right now into the end of the year and just let time do the work for me. Because when we look at this, I'm going to just ignore the charts for a moment because that line chart isn't really representative, but like look at this. On a 1 year basis, we're up 20%. 6 months, we're up nearly 6%. Over 3 months, we're up 15%. Yes, today, because we had a terrible day, this thing was down 2%. We're down in the 1 day, 5 day, 15 day, and 1 month. In my opinion, this was a day when I bought a lot of call options on the Qs. I bought the 150s, I bought the 160s. I was very focused today on being able to buy opportunity into the Qs at the end of the year because I view the 150 level that we've essentially been floating at since we were at, where was the other bad day that we had? There was a couple of other like randomly down days. I think it might have been like here at the beginning of July. where we were down, and it's like, why are we down? There's no point because, and when I look at it, look at we are bullish. We just went below our trade low, which is that 560. We've got higher highs, which I love to see. We've got price to rise because our volatility is falling and our correlation must be falling. So the price is rising, and we've been positive before today on the 5-day, 15-day, 1 month, 3 months, 6 month, and 1 year. I love what I'm seeing in the Qs, but this is because I want to spread my risk around because I believe that people are going to be searching for growth. Like this chart right here since April 9th or 10th or whatever has been essentially up and to the right. That's what I want to see. That's what I like to see. This is the type of move that I'm looking for. So we can go back to Apple now. So Apple has had quite the year. The reason why Apple's had quite the year is because this company is so at risk due to tariffs that you're seeing in the United States right now. They're manufacturing their phones in China or India, which China has, I don't know, 50%, 100%. I'm not even sure what the tariffs are, but I know they don't have a deal. And I know India just got additional tariffs just this week because of whatever Donald Trump decided to do on Truth Social or Twitter. He just made them up. So when we're looking at what's going on in Apple, Apple is telling us right now that they are having a tough go of it. We can see that even in the past year or the past 9 months, how long it takes to make a baby, you got bearish at the end of 2024, bullish at the end of 2024, and the beginning of 2025. Then we got bearish in January. We turned bullish slightly in February. Then we went bearish in March. We went like mixed from bullish to bearish to bullish to bearish through April, May, and June, and now we have back to bullish. But when we look at what the price is doing, it looks like we're about to flip bearish again. And the thing that's concerning to me is that again, we haven't gone anywhere. And again, the earlier part of this video, I was mentioning my concern around what happens when the volatility starts to fall. What is happening? Volatility is falling, and so is the price. That is telling me, boys and girls, that the real trend is actually down. And when we look at what we've seen here, this price is below 224. And that's how we started this little period. So right now, if we're looking at the actual data range, going from left to right here, we're looking at the close. Blue lettering with a white background, that is terrible. That means we are 3 standard deviations below the mean, right? 3 standard deviations below the mean. 97 million shares traded. Red lettering with the black background, that means that, or with a white background, that means we are 3 standard deviations above the mean in volume. So not only were we down today, we were convincingly down today. Yes, we are bullish, but we are below the trade level. We do no longer see higher lows or higher highs in the range. We see we got a price to rise, but I would suspect we're going to start seeing more of these price to falls inside of our future price path. And when we look at the rolling return, we're negative on the 1 month, 5-day, 15-day, 1 month, or the 1 day, 5-day, 15-day, 1 month, 6 month, and 1 year. I do not like what I see inside of Apple. There is nothing that is positive when I'm looking at this. I can see why it's one of the most active stocks because it had all that volume, but it is not good. Now let's turn our attention to something that might be a little bit more positive. SoFi. SoFi has continued to be one of those stocks that I think is starting to capture the popular imagination. SoFi not only has the name recognition now because they spent so much money on branding for the past 10 years, but they've got an actual market niche. If you think that you're going to have student loans in the United States start to get kind of pulled back, well, first off, in the United States, students are going to have to start paying back their student loans. The interest is going to start accruing as of today, August 1st, and people are going to be looking for a lower rate because the actual rate associated to federal loans in the United States is based on, I don't know if it's the LIBOR rate or the federal funds rate. It's based on something. So it's going to be incredibly high right now. So people who are refinancing for a fixed rate, SoFi is going to be they're going to gain a lot from that. And you can see, now we've looked at the other stocks so far. We've looked at Tesla, we've looked at Lucid, we've looked at all these other stocks, VALE, these stocks that just don't go anywhere. Look at the movement you're seeing inside of SoFi. SoFi was at $11 in November 2024. It is at what, 21? Yeah. Like you're at 22, $21. You're up nearly 100% over just the past 9 months. When we look at the chart, we are very, very bullish. We see the price going up and to the right. We see that right now we've had the volatility, which has gone from the lowest level to the highest level we've seen in 9 months, and now it's starting to roll over. What I love is that again, as we're starting to see the price roll over, we haven't seen as we're seeing the volatility roll over, we have not seen the price roll over. So as we're starting to see the volatility roll over, I would expect the trend to reveal itself here. The only negative thing that we would see is that right now the correlation to price is actually pretty high. So if we look at the actual data table, again going from left to right here, we do see that we've got price in the middle of the range. That is the green background with the black lettering. Love to see it. We see that we were down 6% nearly today, but we weren't on crazy volume. We had 90 million shares traded. We maintained bullish. We still have a higher low. We are below the trade level, but I do consider that to be actually right on. 21.23 is the exact same price as the close. Funny that you maintained right at the trade level. We're still positive on the 5-day, 15-day, 1 month, 3 month, 6 month, and 1 year. I love what I'm seeing in SoFi. SoFi is one of those ones that I make sure I always keep in my portfolio. The reason why I do it is because I believe that SoFi has a long-term runway with an actual market. It has name recognition and it has the right price. When it comes to stocks, if you've traded for a long enough time, you know that traders, when I'm talking about traders, I'm talking about the retail flow, the people who are buying these calls, the people who are really driving the price with zero DTE options. What you need is you need something that is under $50. You need something with name recognition. You need something that is in their lives. That is what Apple had for a very, very long time. We'll go ahead and look at NIO here. So NIO, I already know that I'm not sure how I'm gonna feel about NIO because some of my previous videos, I really talked about how I liked NIO from the EV sector because I do think that NIO is probably the most useful stock out of all of the actual EVs. And again, I'm not talking about the business, I'm talking about the stock. And the reason why is because look at this chart. You're seeing a massive expansion to the top of the range, which is going higher. You're seeing the price is continuing to go higher. You're seeing that we're very, very bullish with the green, and you're seeing that the bottom of the range is starting to climb. What I love is that the price is rising while the volatility is rising, which means you're getting extreme price moves higher. Now going from left to right here, look at this. So this thing is up 2 standard deviations above its mean at 501. We saw it on very good volume today. It was bullish. It is above its trade level. We have higher highs in the range, which I love to see. The volatility is rising. We've got a price to rise on the future price path, which is fantastic. And if we look, we were positive today. We're positive on the 1 day, 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year. That is all incredibly bullish when we're looking at NIO. NIO is showing you all of the things that I think are going to be longer term inside of the market that's about to develop. Very, very positive because I think the market is going to be looking for small cap. Market's going to be looking for growth. The market's going to be looking for anything that is going to be domestically manufactured inside the United States that doesn't have too many parts and that doesn't get exposed to too many tariffs. Let's go ahead and look at AMD. Now, this is going to take us right back into the semiconductor space. The thing about the semiconductor space is that it's incredibly hot and it's all led by NVIDIA. Now, what we saw earlier for the very first stock is that NVIDIA itself is on a tear. AMD should get at least a little bit of that like contact high of bullishness. We look at the trade, when we look at the actual line chart here for the daily trade range, we were very, very bearish going into the year. And then at the very, very beginning, it looks like of May here on the 6th, we went bullish. We have not looked back. And this price here, we were at $98. And now we're up at what? 171. That's not a 100% return, but that's pretty freaking close. And we're starting to get to a really nice place in terms of when you think about the past 6 months. Look at it on the candlestick chart. You can see we had that bearish move here in November, December, January, March, and April. Right when we hit that bottom on the Liberation Day, which we're experiencing essentially today, we did a handoff here, and essentially we've been bullish ever since. And the prices continue to rise. You're seeing that the volatility continues to break out, which I love because as the volatility breaks out, especially to the upside, that shows that we can start to get gaps higher, which I love to see. We go ahead and look what we've got in AMD. We're at $171 here. We're 2 standard deviations above the mean. We did not see a humongous breakout in volume today. We're still very bullish. We're still very much above the trade level. We have higher highs. The only concerning thing that I'd say is that I'm seeing this price to fall. I'm only slightly surprised by that because it looks like the correlation to the price must be negative, but I'm not sure exactly why we got that right now because I would have figured that we would have had mostly price to rise exactly like we saw here. Right. So like when we started to see it flip bullish, when did it flip bullish? I know we said it was the very beginning. So the very beginning of May here when it flipped bullish, that's when we started to see some of these price to rises, right? In this future price path. And for me, when I get like this price to fall here, I need 2 confirming days in a row for me to really believe that something is transition. That did not transition. You had 2 there, flipped right back. And that was because we were a little, and that these price to fall were coming. And then we had a big down day. And then it flipped right to price to rise and we continued to run. Do we have another? So now we're starting to get the price to fall, which is that is slightly concerning to me. I'll be very honest because the way that I see it, it just is almost like highlighting that something bad is coming inside of the data. And what you want is you want to look for the second derivative. So I'm looking at the custom volatility and the correlation to the price, the custom volatility, and then I'm building an additional thing to determine what the future price path is going to be. But when I'm looking at AMD just objectively on the surface, we're positive on a 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year. The AMD is just showing that right now, tariffs be damned. I'm not sure where they manufacture. I'm not sure how they're getting around them. All I'm telling you is from what I can see here, AMD looks like it's in a very good spot. Now, the last stock that I'm going to look at here is just going to be Hood because this is another one of those meme stocks. The question that I have, and I have not looked, is Robinhood over $100 yet? Because Robinhood hit 90, and there's an old adage on Wall Street, which is that stocks that go to 90 usually go to 100. So when we're looking at Robinhood, Hood as it is, you can see it had the same bullish day as AMD, same bullish day essentially as what we've seen some of the other stocks, essentially May 6th. It has been bullish and has not looked back. Now, when we're thinking back again to what we saw inside of like Lucid or any of those other stocks that didn't really have a range, this is what you want. You want to see you want to see a bullish breakout, you want to see the top of the range rise, you want to see the bottom falling along, and you want to see the price riding out at the top. I love it. The only concerning thing would be that maybe we saw like a slight peak here on the 21st, but I would say that's more just like digesting gains than anything. But that's just how I'm viewing it from my perspective. When I think about it here, it doesn't look like, we probably got over 100 pretty quickly here. Ooh, what I do love again, and I've mentioned this, is when the volatility starts to roll over, that's when trend should start to expose itself. So let's see here. So we did not, oh, so we did break over 100 earlier, and now we're at 99.90. The one thing that's, I mean, so From left to right, I love that we've got the price back in the middle of the range, green background, black lettering. We're still very bullish here. When we look at the trade level, we are right below it at 101.42. I'm not concerned about that. We've got a higher low. We do not have a higher high yet. I will be looking forward to seeing higher highs. We still have a price to rise confirmed. We were positive. Obviously, we're negative today on the 1 day and the 5 day. Today was a big down day, but we're still positive on the 15 day, the 1 month, the 3 month. You're up over 105%. 6 months, you're up 78%, and 1 year, you're up nearly 400% for the year. These are the type of stocks you're looking for, and generally, these are the type of stocks that I'd be paying attention to. When you're thinking about like, ooh, when would you have found an opportunity? Well, first off, this is how I start to think about things: is when does something really start to see a break, and really when does it start to change? So this thing has never been down on a 1 year. That's completely fine. Do we get either the 3 month rolling return start to go positive, or the 1 month, right? So like here, at this point, I mean, a year ago, I mean that's crazy if we actually look at this. A year ago, this stock was $20. Today, it's 100. Like that is a crazy return, and that is why you get a 400% return over the course of 1 year. This is what you're looking for. Again, if you're interested in our trade range authentication.web app, you can log in, you can sign up for free, you just use your Google. What you do if you're a free user, you do get 30 of them a day. So you can look at 30 individual stocks. You can still add things to your portfolio the same way that I am right here. You'll be able to use the portfolio, you'll be able to use the sectors, you'll be able to use what you can do is you can actually, and I'll go back real quick. You'll be able to save and look at portfolio, sectors, macro, and world, and then you can always do the mystery stock challenge. I haven't called this out just yet, but I have started an actual thing where we've got a mystery stock challenge. If you want, you can go ahead and follow the mystery stock bot on Twitter. Just invented it. I just created the whole API integration. So now it'll create an entire, it's actually going to give you like a price and kind of give you a chart here. If you get 5 in a row right, you get an entire free month of premium on this app. So go ahead and follow the mystery stock bot. You can always go ahead and follow me, Bootleg Macro here. Obviously, I've got my URL right in my bio, but you can see that I'm just posting kind of what I'm seeing here. Some of the things that I've been paying attention to, and then I'll continue to do the daily most actives here on Yahoo Finance. But let me know what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, I'll talk to you soon. See you in the comments. Bye.